Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where we recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano. Today's the 28th of March, 2023. Alright everyone, let's get into it. So there's been talk of this tool over the last few weeks called the CLWP tool. Now, the reason I haven't covered it yet was because I was waiting for something more user-friendly to be released here for people to use, and that's exactly what has been released today. So if you don't know what this is, I'll quickly explain it. So CLWP stands for Consensus Layer Withdrawal Protection. I know it's a bit of a mouthful there, but essentially what this tool does is it's basically a way for you to change your withdrawal address before any potential attacker can. Now, why would you do this? Well, if for some reason you have confirmation that an attacker has been able to get access to your ETH2 seed phrase, so when you set up your validators as a solo staker, for some reason your seed phrase was leaked and an attacker has access to it, well, this tool will help you race against those attackers to make sure that you set the withdrawal address and you set your withdrawal address to an address that you control before an attacker can, or I should say set your new withdrawal credentials, your 0x01 withdrawal credentials to your address before the attacker can, so that you can secure your funds and so that the funds can't be stolen here. Now, of course, it's very hard to know if you have been, it's basically impossible at this stage to know if your seed phrase has actually been leaked or someone has gotten access to it, because as we all know, there is no beacon chain withdrawals yet. So there's no way for an attacker to actually withdraw the funds. So for example, if you are confident that your seed phrase has not been leaked, well, there's no way to prove that yet. There might be post withdrawals, at least. You'd have to wait some period of time to confirm that. But yeah, unfortunately, there's no way to confirm that right now. Now, in terms of securing your seed phrase, if you did the proper thing, which was generating the seed phrase on an offline computer, and preferably one that you don't use for anything else and never goes online, but you didn't have, that wasn't critical, but if you did that and you wrote it down physically on a piece of paper and you haven't actually entered it into any internet-connected device since doing that, and you've stored that piece of paper somewhere where you have certainty that no one had access to it, well, then you should be okay. But even if you are confident about that, you can actually still use this tool right now. You just have to basically go through the process here, drop in your deposit file and everything. You can go through the process here, and what Beacon Chain will do, or what this service will do, is that as soon as the withdrawals go live, they're going to try and broadcast these transactions into the network as fast as possible. Now, the way to do this is obviously get the validators on board from services like all the ladder operators from Coinbase, from Binance, to submit this into a block straight away. Now, the ideal scenario was that it gets into the very first block of post withdrawals, right? Because that way, the attacker, even if they're trying to get their transaction included, they're probably not going to get it included in that first block. Instead of your transaction being included, or this beacon chain transaction being included. So it's a cool effort. It's a cool initiative here. As I said, there are a lot of caveats to it, but if you want to do it, you can. You can go put it in here, and all it will do is change your withdrawal credentials to 0x01, which you have to do anyway if you want to withdraw from the beacon chain, both rewards, consensus layer rewards, and the initial stake. But yeah, that's essentially what this tool does. So hopefully that breaks it down for you guys. I'll link this in the YouTube description below. And the reason I bring it up as well now is because it's only 2 weeks till withdrawals go live. So yeah, definitely topical for us right now. All right, so some big news out of, the regulatory arena. So I'm sure you've all seen that the CFTC, or the Commodity Futures Trading Commission in the US, has sued Binance Holdings for a bunch of different things. So they're alleging so many different things with Binance. They're alleging insider trading, essentially. They're alleging that CZ and his team is trading against customers. They're alleging that they allowed money laundering to happen on the platform, terrorism financing. So a bunch of all really, really crappy stuff, right? Obviously. But there was one kind of silver lining in the lawsuit, or one little nugget that I thought was worth highlighting. And that was that the CFTC stated that BTC, ETH, and LTC are commodities. Now, obviously, I want to focus on ETH here, not the other two, but this goes in the face of the recent, I guess, lawsuit that we saw from I believe it was the New York, one of the regulators in New York, NYAG, I believe, New York Attorney General's office, saying that ETH was a security. It goes against the SEC, hinting that ETH is a security, right? And look, I did say it was a silver lining, but it's also a very frustrating thing, because as you can see, Paul from Coinbase here, who's the chief legal officer at Coinbase, quote tweeted this and said, a security can apparently also be a commodity, except when it's not. And it depends on which regulator you ask and when. If you're confused, you are not alone. Is this really the best American law has to offer? And this is actually incredibly topical with all the regulatory stuff that's been going on, especially with the SEC, where, as I've said before, there is no regulatory clarity around this. So how can these centralized players be able to play by the rules if they don't have any clarity here? And it's clarity on things that there shouldn't be a fight over. Like, there should be very strictly defined kind of powers for each of these regulators, and ETH should have been defined a long time ago about what it is. But there's this back and forth. There's this kind of like back and forth game with the regulators, where the SEC says that such and such is a security, and then the CFTC says no, it's a commodity, and then other regulators will say it's a security or a commodity, and we just go around and round in circles, and there's no clarity, and we're kind of in limbo here. So I do hope that soon we get clarity on this, but I'm not holding my breath about it. It seems like something that Congress would need to legislate on, or at least they would need to actually go to these regulators and say, hey, this is your jurisdiction, make your mind up, work with the other regulators. You have until this date to do so, and to classify these things and to provide a framework, because they're just not doing their job, obviously, at this point in time. So thought that was worth highlighting. But yeah, the Binance stuff, not surprising to me at all. I've always thought Binance was pretty shady. They were much more shady in the past, when they first started in like 2017, then 2018, 19, and particularly 2020, they were doing a lot of shady things. Now, they have cleaned up their act over the last couple of years, but I think that's because, and I've mentioned this on the refuel before, that's because they knew the regulators were going to come down on them, especially in the wake of the FTX collapse and other such things that happened last year, and when we're seeing this now. And in the actual lawsuit, it does reference things that happened in 2019 and 2020, so it's basically the law catching up with Binance and CZ here. Now, do I believe that this means that Binance is going to go under, or they're insolvent or anything like that? No. What's going to happen, in my mind, the worst case scenario here is that Binance pays a fine. They probably admit no wrongdoing and no guilt, but pay a fine. They, change a few things internally to make sure they're more strict about money laundering and all that sorts of stuff, and away you go. Because this is exactly what happened with BitMEX. So BitMEX went through the similar situation in 2020, and they paid fines, and BitMEX's market dominance went down a lot, but they still exist today. They didn't go under or anything like that. They didn't lose any user funds or anything. So I think that's the same thing with Binance here. And if you're a Binance user, I wouldn't really be worried, even though I've always suggested that you shouldn't store any significant funds on a centralized exchange unless you're a trader and you recognize the risks. But if you're a holder, you should definitely not be storing significant funds on centralized exchanges, let alone centralized exchanges like Binance. As I said, I don't believe Binance is insolvent or going under or anything like that, but if you have to store funds on a centralized exchange, if you don't trust yourself, at least do it on the much more reputable and much less shady centralized exchanges like Coinbase and Kraken, right? The ones that are based in jurisdictions where they're heavily regulated, not ones like Binance, which are basically cowboy exchanges, or at least historically have been. But yeah, you can view this full kind of suit for yourself in any number of locations. You can just Google it. I'm sure a lot of you have seen it already. But yeah, this kind of CFTC labeling ETH a commodity again. This is not the first time they've done it. This has got to be like the 5th or 6th or 7th time or something that they've done this. Goes directly in the face of what the SEC has been saying, what the New York Attorney General's office has said. And as I've said in the past, there's not going to be any clarity here unless kind of like it's been legislated on, or unless Congress actually goes to these regulators and says, hey, you have a deadline, you need to do this by here. If you don't, then we're going to get someone who does, essentially. And then also, if it's settled in court, which I don't think it's going to be, because as I said before, these regulators don't want to go to court. They hate court. It's a very long process, a long drawn out process, and there's no guarantee that they're going to win, and they have to prove their case and everything, and yeah, such and such and such. But anyway, going to move on from that one. Just figured it was worth covering. All right, so speaking of Coinbase, I put out a tweet today where I said, I really like Coinbase's quote unquote update the financial system campaign, because that's exactly what Ethereum is trying to do. Ethereums don't hope for the world to end so that it can be reborn under a new Ethereum paradigm. We simply want to update the current system with a new one that is 100 times better. Now, I'm sure you've seen a bunch of these videos that Coinbase has been sharing about updating the system, saying that the current traditional finance system is like 100 years old. It is not built for the digital age. And we all know this, right? I'm preaching to the choir here. And we all know that that's what Ethereum is trying to do. It's trying to upgrade that system. It's not trying to tear it down and then replace it in a kind of like new Ethereum paradigm where all these people have lost, but at least we have a new kind of a system that is better than the old one. No, we want to upgrade. We want to work alongside it. We want to build an alternative system, and we want to build technology that these existing rails can plug into, but eventually they get replaced by in a smooth transition, a relatively smooth transition, right? So that's kind of like how I view these things. But I'm very glad that Coinbase is doing this campaign, because it really speaks to exactly what we're trying to do. And they're not only just doing the campaign, but they're also building their technology to enable this because of their layer 2 in base, right? And it's built directly on Ethereum. So again, it's fitting in with that Ethereum mission, which is obviously very positive. So I just wanted to give a shout out there to Coinbase, because they're doing amazing work here in spreading the message and getting, and I think they're going to do amazing work in getting a lot of people on chain as part of Base, and that's all going to be awesome. So yeah. Anyway, just wanted to bring up that one because I thought it was relatively topical and important. All right, so on to some bigger tech-related news. So Polygon's zkEVM is now live in a mainnet beta fashion. It is permissionless, public, with fast finality, EVM equivalent, and completely open source. Now, you can go play around with this today, right now. You can go change your RPC on MetaMask. There's already an explorer for it that Etherscan built for them, so it's really easy to track your transactions and check your transactions and all that sorts of stuff. I've played around with it a little bit. It's really smooth. I really like it. The fees right now are quite high compared to what they are going to be in the future. And I saw a few people comment on that saying, well, okay, the fees are much higher than I thought they were. Yes, because the way that zkEVMs work or zk rollups work is that the fees are actually amortized across the cost to generate the proof. Now, obviously, as you have more users, the costs get spread out among those users, so that the cost for each user comes down. And I've talked about this a long time ago on the Refuel, but I don't think I've brought it up lately. But that's essentially how zk rollups and zkEVMs work. The more people that use them, the cheaper they get to use. And that's the magic of this zk scaling technology. So if you've seen people comment on the fact that Polygon zkEVM, or really any zkEVM, isn't as cheap as they thought it was, it is exactly because of that. It's because there aren't that many users yet, obviously, because it's brand new. But as more and more users get online, as more and more transactions are processed, it's less about it's not really about the users, actually. I should say it's about the transactions. Obviously, the more transactions there are, the more spread out the fees are, and the cheaper it is for each user to generate that proof. But I'm just using users obviously as an analogy here, or as a kind of like easier way to explain this here, but that's how it works. So yeah, these things will get cheaper over time because of that. But anyway, this is funny because we've had, and I'm going to talk about this in a sec, but we've more in a sec. But we've had Polygon zkEVM mainnet beta, right, go live. We had zk sync error zkEVM, which I think they're still calling alpha, go live. And we had Consensys actually put their zkEVM on testnet today. We have Tycho zkEVM on testnet. We have Scrolls zkEVM on testnet. And we have Starkware building out the Kakarot zkEVM, which I believe is on testnet or going to be on testnet soon. And this is just freaking insane because we have all these zkEVMs that are live in the first quarter, basically, of 2023. And as I said before, no one expected that to happen until maybe 2025. So we are just accelerating the development here of this zk technology, of zkEVMs, and we have so much engineering talent behind it, so much brain power behind it, so much research and development happening, so much money as well behind it, that it feels like an inevitability at this point. It feels like these things are live. Users can actually play around with them. They're going to keep getting better over time. They're going to build up their ecosystems. And by the time the next bull market rolls around and we have all these new users coming in, the Ethereum experience is going to be so incredible for these new users. They're not going to have to go to Ethereum layer 1. They're going to bridge in from centralized exchanges to things like the zkEVM, to things like Optimism and Arbitrum, of course, and Base. And they're going to have such an amazing experience. And I know I've talked about this before, but I really do think that it's not emphasized enough that the experience that a lot of new users had with Ethereum in 2021 was really poor because they could only really use layer 1 and they got priced out really quickly. Now, in the next bull market, they're going to be able to use these layer 2s, these zkEVMs and whatever else, and they're going to have an amazing experience with Ethereum. So anyway, I'm going to end the gushing there about that, but you can get all the details about Polygon zkEVM in this thread and also this thread here, which I'll link both of them in the YouTube description below. Oh, this one isn't a thread, sorry, it's a blog post which you can go check out for all of it. And there's also a bankless episode on the Polygon zkEVM that you can check out. I've already listened to it today. It's really great. It actually clarified a bunch of things around how Polygon is viewing the Polygon POS chain. TLDR, the POS chain, they seem to be viewing as a chain for the low value transactions into the future, such as gaming related transactions and low value NFT transactions. Rather than the high value DeFi stuff. And that's what's going to be happening on the zkEVM instead of the Polygon POS chain. So the POS chain will be around for the foreseeable future, but it is definitely, I think, something that will still eventually be turned into potentially better technology like a zkEVM. But honestly, if that it's going to be just a low value chain low value application chain, I think that makes a lot of sense as well there. And there's already a big ecosystem on there regardless, with DeFi and stuff like that, a lot of users on there, so that's all well and good as well. But as I said, you can go check out all the Polygon zkEVM stuff that I've got on my screen. It'll be linked in the YouTube description below. All right, so as I mentioned before, Consensys has launched their zkEVM onto the testnet. It's called Linea here. Hopefully I'm saying that right. Linea. It looks like it's spelt linear, but someone will correct me if that's wrong. And they're basically taking on a different narrative thread here, where they're basically calling it Linea is a developer-friendly zkEVM, powered by Consensys, of course. Now, as I said, this is on testnet right now. It is not on mainnet just yet, but this is what Consensys was teasing over the last few days, and something that they've been working on for quite a while now. But yeah, you can check out the blog post and the tweet thread for information on their approach here. As I said, they're going for a developer-friendly approach to the zkEVM, and it's just another one of these things that is live on mainnet, all in the, I should say testnet, but all in the last week here, which is great to see. Now, look, I've said before that I don't believe there's going to be that many big winners when it comes to the generalized L2 platforms. Like, I'd be very surprised if there was more than 5 of these things that end up being like really big winners. And I'm talking in 5 to 10 years time when we hopefully eventually get mass adoption. I definitely do think that there is only going to be a handful. But in saying that, I really am very glad that we have all of these independent organizations working on these things, because the amount of research and development that's happening right now on the ZK front is going to benefit everyone, right? Because pretty much, not all of it, but most of it is open source. Most of it is being eventually, I mean, not worked out in the open, but eventually it does get released out into the open, and people can learn from it and use the different technologies. So even if one of these things was to get sunset or fail in the long run because it didn't get product market fit, it wasn't able to achieve adoption for whatever reason, the technology could still be repurposed and used. So it's not a lost cause here. And that's what I really love about the Ethereum ecosystem, or I guess the crypto ecosystem generally, is that it has an open source ethos, which means that even if the projects fail for one reason or another, certain aspects of that project can be picked out and applied to other things. It's like a lot of things in life, right? A lot of industries where certain things can fail, but you can go and get parts off of it. I think an analogy would be like a car, right? Let's say a car, really old car that just isn't working anymore, is basically trash. Well, you can use the parts off of it for other things. A lot of the time, the metal is still very usable, right, and can be recycled and used for other things. The tires can be recycled and used for other things, and a lot of other parts within cars. Just depends on how beat up the car is, right? So the same is true for any project within crypto. They can be reused for parts in other projects and live on like that, which I think is obviously very, very cool. But great to see Consensys launch their zkEVM on testnet. You can go check out the blog post, the tweet thread, and of course play around with it on testnet if you like. It's very easy to. As I said, they are targeting a developer-friendly approach here. So if you're a builder or a developer, you can go check this out and see what it's all about. All right, so Dune Analytics has announced that they're going to be, they announced their first GPT-4 powered feature called Query Explanations, and they're sharing their LLM roadmap for the future, which is basically, I guess for the layman, their AI roadmap for the future. So basically what this feature does, they explain it here. Have you ever looked at a 500 plus line SQL query and wondered, what does it do? Well, Dune now has you covered. You can head into the query you're interested in and click on the new little button at the top, at the bottom below that previously intimidating SQL code, and you'll be greeted with a detailed explanation of the query that is being generated by AI, by GPT-4 here, which is very, very cool. I've been following loosely the AI and GPT stuff. I haven't really talked about it that much, but I've been following it. I mean, because it's all over Twitter, but it seems to have a lot of really amazing applications for coding and scripting and explaining things and coding up things. So this is just something that I think Dune has obviously noticed and integrated within their website here, which is going to be really great for people, because I've constantly gone to these queries before on Dune Analytics, tried to fork them and change them around, and I look at them and I'm like, okay, what's going on? Like, I'm not an SQL expert. I mean, I have service level knowledge, but I look at it and I'm like, okay, this is complex. This is going to take me forever to learn. I would love someone to just tell me what it does and what I have to change in order to get my desired result. Well, that's exactly what this tool does. So very, very cool to see this. You can, of course, go check it out for yourself. It is live right now. And then you can also read about Dune's LLM roadmap, as I said, in this blog post here, which will be linked in the YouTube description below. All right, speaking of awesome features being added to our favorite services, Etherscan has added a long overdue feature called local time zone. So this is pretty self-explanatory. You'll be now able to see timestamps of blocks and transactions across Etherscan based on your own local time zone. This is something that had annoyed me a lot in the past, especially for tax purposes, because in Australia, and I think lots of parts in the world, you qualify for long-term capital gains tax after you've held a crypto asset or any asset for 365 days. Now, because of the different time zones on Etherscan compared to my local time zone, I would have to go convert these things, right? I would have to go make sure that I was actually holding it for the period that I was supposed to hold it for before being able to sell it and lock in those capital gains discounts. So that would be a big kind of benefit for me, and also just tax in general, being as accurate as possible on your tax return, so that you aren't putting the wrong date on the form when you're doing your kind of like when you're filing your taxes, I should say. So very, very cool quality of life feature from Etherscan. As I said, not much more to say about this one. You can go check it out. It's live right now on Etherscan, and I'm sure some of you have already seen it. All right, another feature that has been added to another one of our favorite services is the Risk Rosette on L2Beat. So they've created a more accessible and user-friendly presentation of risks associated with layer 2 solutions. So you can explore the feature on the L2Beat website here, but the key points about Risk Rosette are that you can hover over mini graphics on the L2Beat main page for a quick recap of each of the L2's risks, find it on the corresponding L2 subsite above the main chart and hover for more details, and stay informed and make smarter decisions in the Ethereum L2 space while being encouraged to explore the technical nuances. Now, I highlighted the risk analysis page on yesterday's refuel on L2Beat. This can be quite complex to go through and quite confusing for users to go through. So this Rosette here, where you can basically hover over, I'm hovering over the Arbitrum 1 here now, and get a quick breakdown of exactly what the risks are associated with these networks. Now, of course, these things are still not noob friendly. There is no way a noob is going to be able to look at this and know what's going on here, but they can always click through of course, and get more details about this in the very, very detailed section on L2Beat. And they definitely have plans to make it easier for users to understand all this as time goes on, and make it and break it down more, while still being able to appeal to the more advanced users that want to get more information about these things. But just another way that L2Beat is keeping us safe, keeping us aware of the risks associated with all of these different L2 networks that are going live lately. So kudos to them on that, and you can check out the Rosette risk Rosette for yourself on l2beat.com. All right, another update on the Euler funds. So it seems most of the funds have now been returned. Last I checked here, over 75% of the funds have been returned. I believe a bit more has been returned since then. We may be up to about 80% of the funds being returned, which is absolutely awesome to see. Obviously, as I said, I did expect most of the funds to get returned. I think I said this yesterday. I did expect most of the funds to now get returned, which means most users are all users are going to be made mostly whole, right? Probably, maybe you only get back 90% of the funds you had in there. Well, that's much, much better than getting back 0% of the funds you had in there. Or maybe, as I mentioned yesterday, Euler will do some kind of insurance program where they essentially are able to pay back users over time and fill the gap themselves. I don't know. I haven't heard anything about that or seen anything about that. But obviously, absolutely awesome to see that most of the funds have so far been returned, with the remainder, I think, expected to be returned in the coming days. So what a wild ride it has been for Euler in the last 2 weeks. I can't imagine what the team has gone through trying to negotiate with the hacker, just hoping that they would return the funds. I can't even imagine what the hacker or hackers are going through right now. It seems like they're total amateurs here. It seems like their group has fallen apart, and it seems like certain members are breaking away from the group, and they're probably very, very scared of being caught. I don't know if Euler Finance's or Euler Labs' legal proceedings will continue if all the funds that can be returned are returned. It would seem like they wouldn't, unless they already knew who those people were and they wanted to prosecute them. Who knows, right? And we don't know if they're going to return all of the funds minus the bounty that they will say that they could keep, the $10 million, I think it was, bounty, or $20 million bounty that they could keep. Who knows, right? We'll see what happens. But yeah, I just wanted to update you guys again because it's good news for Euler users. All right, last up here is a bit of a talk about not really the markets, but kind of the markets, but you'll get what I mean. So my tweet that I put out today, and I said, this is going to sound crazy, but I still think the 2018/2019 bear market was worse than the current one in terms of overall sentiment. Back then, even most of the people that stuck around weren't sure that anything other than BTC had product market fit and a future in this industry. There were massive doubts around Ethereum, of course. Compare that to today, where the only people who believe that crypto is dead are the normies who don't pay attention to this industry outside of bull markets anyway. Now, I'm assuming that a bunch of you weren't around for 2018 and 2019, so I will give some context around why and expand on why I believe back then was worse than the bear market, or the current bear market that we're in. But if you were around back then, you're going to know exactly what I mean here. So essentially, I've explained this before, but just to recap. In 2018, I'll start with 2018, ETH went down 94%. It was absolutely brutalized. Everyone except the most diehard Ethereans lost faith in Ethereum. Everyone pivoted to being a Bitcoin maxi, right? And everyone went all in on BTC and was like, you know what? BTC is the only thing that has product market fit. Ethereum was a mistake. ICOs proved that Ethereum has nothing going for it except short-term speculation. Let's forget about Ethereum. Then in 2019 was like essentially the same sentiment, but it was even worse because we were looking for a kind of product market fit that people could resonate with. The hardcore Ethereans always kept the faith, but the hardcore Ethereums were a very, very small percentage of the people in crypto at that point. But we knew about DeFi, we knew about NFTs, we knew about ETH's plans to fix its monetary policy to become a pristine asset. We knew about all that, right? And we were trying to educate people on that. But most of the industry did not. They were very, very far behind. Most of the industry didn't catch up with DeFi until late 2020. And then when they did, obviously Ethereum got massive tailwinds because of that and a bunch of other things, and we are where we are today. But the sentiment in 2018, 2019, especially for Ethereum and broader crypto, was absolutely just horrible. And even though the things that blew up in 18 and 19 were a lot less significant than the things that blew up in 2022, we didn't really have a Terra or an FTX or anything like that. In those years, the sentiment was still, I believe, much worse because of the fact that most people had lost faith in this industry having any product market fit beyond BTC and Bitcoin, because of the fact that all the speculation of 2017 didn't really amount to really anything. I mean, most of it was just garbage and scams and ICOs and all that stuff there. Now, contrast that to today and to last year. No one's doubting the future of crypto that's kind of in crypto, right? And no one has really pivoted to being a BTC maxi. The Ethereum ecosystem is still growing in leaps and bounds. We're developing so many really cool things, layer 2s, stuff like that. Ethereum Proof of Stake was delivered with the merge. We have withdrawals coming live. I mean, there's so much happening, right? We have a defined roadmap for Ethereum. We have layer 2s that have roadmaps. We have so much happening in the DeFi space, in the NFT space, in the DAO space. There is no doubt at all. And there's no pivoting to being a Bitcoin maxi. Maybe some people did that, but most people didn't. There is no doubt about ETH's value and potential future value or anything like that. There is real product market fit for a bunch of different things. Now, of course, there was a lot of things that blew up last year, and there are certain areas that people have lost a fair bit of faith in. I think even NFTs, there's kind of like a funny thing in the NFT community right now where a bunch of them seem to be losing a bit of faith, but not that much, but a little bit, because a lot of the volumes have dropped a lot, but that's only natural given that it's a bear market. But generally, no one is saying that Ethereum doesn't have product market fit, that the rest of crypto doesn't have product market fit, and all the use cases that we've come up with, and no one's really becoming a BTC maxi anymore. And I think that positive sentiment has resulted in crypto being so resilient in the face of a lot of the macro headwinds. It's been really bad, right? Obviously, around the world with those headwinds, but crypto is really just doing the same thing it's always done in bear markets. As I've said before, ETH and BTC go down less than everything else, but everything else gets slaughtered because it went crazy in the bull market. That is completely normal for crypto. That's no different to any other cycle. So, as I said, even though there's these massive macro headwinds, crypto is doing its own thing. There's a lot of certainty and a lot of positive sentiment around the future of crypto, and we're fighting the battles that we need to be fighting on the regulatory front, on the adoption front, on the scaling front. And I believe that we're in the end, it's all going to turn out very positive. Well, not all of it, but most of it will turn out very positive for the crypto ecosystem there. But anyway, on that note, we're going to leave it at that for today. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.